morning. Thank you so much for investing your time with us this morning.
Looks very nice.
My name is Younes, and I will be moderator for this panel.
Everyone's talking about workflow, trade flow.
Is that from here? Technical
That's where,
glitch?
you know.
Okay. So today we have an amazing panel on the receivable and
Difference we
supply
have is
chain
this-
shifts, what corporate really wants. Where we'll be talking about the recent shifts and trends that the market have seen. But before we dive into the panel introductions, I want to understand better, please, the audience in this room. So by show of hand, how many of you are bankers? Okay. And how many of you are corporates and fintechs? Okay. Bankers still dominate to a certain extent.
That's
Very good.
That's good. Then I'm going to be able to explain to them what we need, right, as a corporate.
Exactly. That's awesome. So our goal today is whatever your industry is, that you'll come away with an understanding, a new idea, a fresh perspective, a new strategy they'll be able to use and apply to better your business and benefit. So here's the format or an idea of what to expect today. We'll take a moment for each of the panelists to briefly introduce themselves and let you know about their background in this industry. I'll kick off the conversation asking some questions that will draw high-level conversation and well-versed comments and thoughts from our panelists today that will be relevant to your respective industries. And then towards the end, we'll open the conversation to the floor for you to ask questions that you have been thinking about. Sounds good? Okay,
Yep.
Great. Let's get started with the panel introduction. I'll start first, as they say, ladies first, with Fatenah El Danab. Fatenah?
Thank you, Samir. Fatenah El Danab. I've been at Bank of America now for the past 5 years, looking at trade sales to corporates and FIs in the region. Prior to that, I was at HSBC, but I've been in the region for a good, and I'm going to divulge a lot now, 29 years.
Thank you, Fatenah.
Thank you.
Fiji?
I work with Credit Agricole in Dubai. I've been with them in the region for the last 26 years. So I've been in the coverage role and in the product role for the last 10 years, looking after the FIs and the corporates for the MENA region.
Thank you, Fiji. Bruno?
Good morning, everyone. So I work for BRF, that is one of the largest food companies in the world. Here in the region specifically, we have the SABB brand. I have been working with trade finance and working capital for the last 10 years. Have been implemented receivables finance and supply chain finance back in Brazil, Europe, here in the region. So very happy to discuss with you today.
David?
Good morning, David Leslie, General Manager for Trade Receivables Finance, Saudi British Bank in Riyadh. I've been about 17, 18 years with HSBC Group in Asia, Latin America, and best for last, Middle East and Saudi Arabia. And we're helping a lot of corporates in the booming Saudi market right now around structured trade finance and traditional trade. Thank you.
Thank you very much. Supply chain is a complex topic. Many people in the market today has a different interpretation for it. Some of the banks thinks it's payable. Some other banks believe it's receivable. Very few banks believe that it's both at the same time in this region. Fiji, what's your overview from a market uptake in this MENA region for supply chain financing solutions?
Yeah, as you said, I mean, in this region, from my perspective, when people talk of supply chain finance, it's more of the payable financing side of it in the wider definition of supply chain finance. We are not speaking here about receivable side of it, receivable discounting or forfeiting or factoring, or the various loans that is available against inventory or receivable or distributor finance or pre-export finance. The evolution, in my perspective, seen in the region is that it has been slow mainly for two reasons. Firstly, SCF is focused on higher rated, better funding buyers. So SCF has to have a kind of an eligible business or eligible asset to fit into this product. This region has been more focused on dealership in the prior years with predetermined payment eras, and there is no arbitration, especially when it comes to the supplier side, because these are all better rated or well-to-do dealers who are exporting, and supply chain product didn't fit that well into the region. From my perspective, this fits well into the manufacturing side of the business, or from the retail, where you have multi-sourcing coming from emerging countries where there is a differentiation, which we see now is more in the region in the last 5 years. So therefore, we see an uptake in the supply chain. And primarily, it was more of a distributorship with a dealership structure. Second would be the corporates or the treasurers focus on cash flow and working capital optimization. The region was very used to short-term debt. Whatever is your due date, 30, 60 days, take a short-term debt or pre-import financing and settle the debt, and financing in this region is cheap. But they never looked at cash generation structures or cash preservation structures, which supply chain now produces. And I think the treasurers in the region have seen that there is a value, that they can extend their payables and preserve some more cash. And if you put it at cost of capital, it does derive some value. So I guess these two, from my perspective, would have been the main reason. And now the manufacturing and the retail industry, the aviation industry, with multi-supplier models are seriously looking at this. And we do have few clients on this program.
Thank you, Fiji. David, you're based in Saudi, and Islamic banking is, let's say to a certain extent, an alien topic to many of us. Where does supply chain financing sits from a sharia compliant perspective? How does the sharia and the Islamic finance view it? And is it happening in the Saudi market? Can you give us please an overview?
Yeah, so we're the largest trade bank in Saudi by quite a large factor. If you look at the Saudi market, globally it's the largest Islamic finance market in the world. So if you're covering a large piece of the market in terms of your client base, you need to offer both conventional and Islamic solutions. And if you look at structured trade, whether it's supply chain finance, inventory finance, or receivables finance, you're going to need to look at solutions that enable the benefits that everybody wants. And those would be things that, in terms of supply chain, would be, for the buyer, they want a payable, extension of payable terms. They want an automated platform. They want something that's going to create loyalty and assist their suppliers with liquidity. And the suppliers want, access to early payment at a rate that's better or equal to what they get on their own. So those benefits you want to really, provide to the market. But if you have a conventional buyer in the Saudi market, the chances are some suppliers will not want documentation that has riba or the interest rate in it. So you need to look at solutions that can speak to both sides to have a really sustainable program for your buyers. And also some buyers themselves will not want a conventional product. They want a sharia solution throughout. So we've looked at that from the market, and we've launched a solution that provides those benefits in the conventional form, but has a sharia construct to it. And essentially, for layman terms, at the outset, when you're going to discount an invoice, you've got we do a metal trade on behalf of the client. We purchase in the market on a deferred payment basis. We make the funding to the supplier, and we as an agent, we sell that trade immediately and then recover the funds afterwards from the buyer. But we've also looked at the same kind of structures across the different solutions. So we have the same thing for inventory finance. We've just launched that. It's an off-balance sheet solution. Really important given that the market is really booming at the moment. Commodity prices are rising, so a lot of clients are looking to really decrease their DIO. They've gone perhaps from just in time to just in case. So this solution offers that benefit to clients. And the same on the receivables side. So whether you're looking at DPO, DIO, or DSO, we have solutions both conventional and Islamic. But most importantly, the Islamic piece should meet the requirements of the local market, but also should not disturb the underlying benefits we're trying to achieve through structured trade.
Thank you. Now, 2020 COVID pandemic reality. Supply chain from a logistic perspective was disrupted. So how did the clients behave and react? Clients who were not on your supply chain product or solutions. Did you see a market uptake after March 2020, or shall I say February 2020? But do you have today demand from your corporates for these solutions? And are you, as a bank, ramping up your operations for these type of solutions? Fiji?
Yeah, I mean, COVID has accelerated the digitalization adapted to acceptability by the corporates, which in the region was one of the things. It's a paper convention that they were used to. So from a digitalization perspective, we've seen few corporates looking at it in order not to interrupt. And also from a physical supply chain perspective, they see that they need to provide liquidity for the core. So we have two of the manufacturing entities, and they were very clear that their suppliers should have the liquidity access, mainly from the emerging markets, so that they can keep their inventory supply. So we hear about this supply disruption things, and corporates have realized that they can support their suppliers for keeping their inventory. And as I say, that if you can hold also more inventory, which David touched upon, by extending your payables, and you're still keeping your cash conversion cycle same. You're having more working capital by way of holding more inventory, but you have kicked the can down on your payables, and your overall cash conversion cycle has kept same. So we see from a cash conversion perspective, from a physical supply chain for core suppliers, that there is more queries and more in pipeline that clients want to put this up.
Okay. Fatenah?
I think there's a bigger picture here to look at. There were a convergence of factors that led, I think, to the market uptake globally that we've seen on the supply chain finance side, specifically focused, obviously, on the back of the pandemic, which precipitated this rush to manage their balance sheets more effectively, be it from, specifically from a supplier perspective, as well as what we at Bank of America call a treasury megatrend, and the evolving role of the treasurer in more effectively balancing their balance sheet, looking at cost reductions, efficiency gains, whatever it may be. So overall, yes, we saw an increase in the number of RFPs that have come out focused on trade finance and specifically supply chain finance. Just to give you a little bit of a perspective, we onboarded more suppliers in the first 4 months of the pandemic than we did in all of 2019. So is the uptake slow? When you look at the Middle East from a statistics perspective, yes, we are a little bit behind what Western Europe is doing, but actually I find this exciting because it means we only have one way to go, which is up. Based on the client conversations that I've been having, I've been seeing an increased interest in supply chain finance in the region. And going to Fiji's point, both on the receivables and on the payables side. So I think, yes, the market uptake is slow because the ecosystem is complex. And I think that's across the board for everyone. But I think from a Middle East perspective, exciting times.
Thank you. David, Islamic financing in Saudi market, how's it been doing regarding this?
Well, I think in general, as my peers have mentioned, the COVID situation really accelerated a lot of things. Certainly the digital aspects, but hats off to the corporates as well, who really, in an agile way, move their supply chains from one location to another, diversified suppliers. This happened really, really quickly. We saw a lot of clients just really nimbly move through that period, and also adopt for the first time digital channels or supply chain finance or new structures. One benefit of structured trade versus traditional trade, using letter of credit versus supply chain, is that today, at least the financing element, the banking aspects are data-driven. So you don't need to be in our office to do it. You push data from your ERP system, really good from a COVID perspective, right? Traditional trade will digitize, and there's a lot of panels during this event about that, but it's a bit of a laggard at the moment. But certainly the digital aspect, but also it's the pressure on working capital, right? So we saw, prices rising, we saw disruption in supply chains, need to hold more inventory. That put pressure on working capital. That speaks to structured trade solutions to give clients, the structures to free up working capital and put it to good use.
So was it a circumstantial change or it's a systematic change in mentality and mindset?
I think that the trend on structured trade, I mean, if you look at the Saudi market per the FCI stats, it just started in 2013, right? So it's quite new. So we're seeing really strong growth in the solutions in the Saudi market. And certainly during COVID, we saw really high growth rates, but it was directionally going the same. I think the bigger acceleration was on digitalization of traditional trade and using the bank's channels. We saw a massive uptake in that during that period.
Okay. Fiji, you think it was systematical or circumstantial?
I think for me it was, the corporates we see it's more circumstantial because they were facing difficulties and they wanted to find a solution, and now they see that the solution is more useful from their cash flow perspective and from the physical flow perspective.
Okay. I know Bruno has been patiently waiting because...
I'm anxious now, huh?
Yes, you're becoming anxious. But I'll come back on the circumstantial or the systematic point in a bit. But Bruno, having heard, Crédit Agricole, Bank of America, SABB, what went through your mind? What do you think?
So many things first, but I get excited with this kind of discussions. Supply chain finance is one of my babies. So I came to the region in 2017, right? And when I came to the region, I met maybe 15 banks. And every meeting, do you have supply chain finance? Do you have supply chain finance? Yes, we have. We are thinking to have. So pretty much in 2017, I could count, maybe in one hand, how many banks were truly provide supply chain finance in the region. And most of them, they were the global banks, right? So then 2018, 19, still the global banks, a few regional banks. But of course, when the pandemic came, considering the ecosystem, also the fintechs playing a role here, so the clients demanding for supply chain finance, I saw an acceleration, right? Even us, we are able to implement one supply chain finance with one of the local banks here in the UAE, which was a big milestone for us, right? So why it was not there before? Because simply the products were not right for the corporates, right? When I come to a bank and say, look, do you have supply chain finance? Yes, I have, but you need to fill these 15 forms here, plus these another 10 agreements, and your suppliers, by the way, they need to go through the onboarding, another 10 agreements, it doesn't work. So the corporates will say, okay, if I can get a loan that is much simpler and cheaper, by the way, why should I get a supply chain finance? And then this comes back to your point, right? So, okay, if you can provide me a solution off balance sheet at the same cost or cheaper than a loan, yes, maybe I'm interested, right? So then in this case, I see an evolution in the region, and I'm very happy to see that. The question is, what is coming next, right? When we go back, when I implemented the first time back in Brazil in 2013, it was pretty much each one of the banks, they were providing their solutions, which also doesn't work for the corporates in the long term, because then I have 10 supply chain programs to manage, right? That's why now the platforms, the fintechs, they are gaining space because they simplify that for the corporates. Then I have one single platform where I can plug all the financial institutions, my own money, in order to manage my supply chain, right? So I think this is more or less what I have in mind as of now. Later on, I'm going to share other things with you guys.
Okay. Very valid points. I understand for a treasurer, the key to the cash flow cycle of any organization or entity is how fast you'll get the money into the account. But you've said one of the local banks has given you a solution. Was it a complete solution, or it was just one side of the transaction? Was it a payable or was it a receivable?
Also the payable side, right?
Okay. So it's not the full supply chain cycle. There is still a market gap in terms of product offerings from the bank in here.
So I see a big gap on the receivable side, right? So, and here, there are many discussions, regulation, so how the UAE government, or what is the law, etc., to consider off balance, non-recourse, etc., because we only do non-recourse, right? So, but I see a big gap in terms of the receivable side, especially in the UAE, right? I think Saudi, in this case, was a little bit more advanced than the UAE. So a lot of opportunities here for us to have both on the receivable side, on the supply side. Inventory side, we are far away, but still, I'm chasing the banks to find a solution for me, you know? But yes, definitely, I think we are just starting. And one very interesting point, again, when I came in 2017, I was attending an ACT conference, right? And then there was a chairman of a big group here in the UAE, and he was explaining why he didn't have a CFO at that moment in 2017, because liquidity was there. No one cares. There's so much money available. But after that, so now liquidity is short, companies, they need to strengthen their balance sheet, and by the way, they need to support their suppliers, right? It's not only looking internally, my balance sheet, how can I extend my DPO, reduce my DIO, reduce my DSO, but also how truly I can support my suppliers, my supply chain, especially the smaller ones, you know?
Okay. Now, while I'm extremely enjoying not being on the bank side today of that discussion, before we get the view of the banks on this, what do you expect from your bank? Do you expect them to come and sit with you and tailor your supply chain program or products according to your need? Or would you prefer to have a prepackaged solution that best fits for all? What works for you from a corporate perspective?
So I think from supply chain finance perspective, it's pretty standard, right? So I think the banks that they don't have yet, they are very late, right? I think now what we are seeing as corporates is the following. Look, I want to have a platform where all the banks connect to that platform, and I can choose which banks, or the suppliers can choose which banks or which liquidity they will access. This is one point, right? When it comes to the receivable side, I think it's more complicated. There is no standard. It depends on each one of the corporates, how they operate, non-recourse, recourse, credit insurance or not. I think it's a different story, you know? So in a nutshell, payable side, standard, bring me a solution where I can plug multiple banks and financial institutions. Receivable side, let's sit together on a table and discuss a few solutions, non-recourse. So this would be the way that I would approach that.
Thank you. So I'll come back to you on a bit on the digitalization aspect of supply chain. I have a question, but we'll keep it for a bit. David, you've heard Bruno, okay? What's your intake on that? How would you, respond to some of the statements that he made?
Yeah, I think it's some really good points. I think it's helpful for all of us to hear that from a corporate who's done it, especially in a market where this is quite new. You know, a lot of entities here have the theory, but they haven't done a lot of programs, at least large-scale regional programs, and you learn a lot from doing those. In the Saudi market, on the receivable side, for example, one gap at the moment is insurance. So the banks don't get the benefit yet of insurance cover as they do in other more mature markets. We're working on that. Which is one of the reasons why SABB, being one of the larger corporate banks, we underwrite most of the risk ourselves. We have fairly good coverage for buyers on that side to help clients that way. From a supply chain perspective, keep in mind, if you're taking a loan, it's a very simple process with a bank. You just sign a loan agreement and you're done. When it comes to supply chain, the sales cycle, you have the documentation, and we should look objectively at our documentation and simplify things to make it easier. But similarly, you have a treasurer or CFO who wants to do a program. They need to convince their procurement department, who may have differing goals and objectives than the treasury department. One's working at working capital, maybe another one's looking at the pricing of goods. So that has to happen. Then you need to convince the suppliers. Some suppliers may not understand these programs and may need a lot of explaining. Other suppliers may have had a bad experience where, in the worst case scenario where they're being asked to sign something where they're worse off than being on their own. So there has to be a real win-win with these things where it's sustainable, where the business case is working for the buyer and for the supplier involved, so they get a mutual benefit on this thing. So I think those points are really well made, and we're seeing a lot of improvement in the market at the moment. And certainly the fintechs bring something new, which is the ability to plug into something rather than having a bank bilateral with a single client. And for the much larger clients, that's quite interesting, and we're seeing a lot of programs like that. The one thing I would say, though, is if you're using a bank's technology, usually there's no extra costs on that. You're just paying for the financing. If you're using a fintech separately and the banks, then you have the compounding of costs.
So as a bank today, do you go to your corporate treasurers or your corporate clients? Do you sit with them and understand their needs and tailor these solutions accordingly? Or you launch a program and you expect them just to pick it up?
Yeah, I mean, Stephen Covey says start with the end in mind. So put the work in at the start and make sure you have a business case that makes sense worth solving for. It's no good for me as a bank to sell something to a client that has no viability, because we waste our time, waste their time, and we get nowhere together, right? And you lose your reputation as well. So, do the business case, look at the supplier base, what is their credit rating, what's their cost of borrowing, we estimate, is there something there to solve for? And if there is, we solve for that solution. Or if it's not, maybe there's another way of doing things that can help the client achieve objectives without that specific solution.
Thank you, David. Fiji?
Yeah, I mean, as I said earlier, it's about the eligibility of the business, whether they need supply chain financing. I mean, if, it could be for the liquidity side of the business, or some corporates just want to do it for the balance sheet preservation, bring in more of their payables on board. For us, we discuss with the clients, we see what is their need, and if there is a fit for it, yes, we kind of take it forward. As David said, we see some treasurers who are interested in it, but when you have still the capital is still cheap, and if you are talking of supply chain, you're talking about large corporates who have very multi sources of funding, from the bond market or from the long-term borrowing market and things. So they see whether the pricing fits, the full documentation process, things, the onboarding structure. So there is an initial lot of conviction needed from senior teams, the finance teams. But what we have noticed is the ones that have started it are seeing the value, and even we hear that they're able to release what they call as a trap cash, which they never knew that they could do these from this structure. So it's a long process to onboard these structures in the region.
Okay. And if we touch base on what we have stated previously, the circumstantial situation that we had that accelerated many of the things, not just in terms of supply chain. Do you believe that this circumstantial position that is there today is going to become systematic, and we will be, as banks, one step ahead from now on? Or will we need to wait for another pandemic to upscale our games?
No, I guess the corporates have realized, as I said, yes, it was circumstantial, but they have seen the value of it. And we see, as I said, we see more queries, more need for it, and we are able to, in the region, I mean, we look after the Middle East and North Africa region, and we're seeing more queries on this, and we are hopeful that these programs will be more. Right now, it is very few corporates that have onboarded on these, but I think it is here to stay, and it is one of our main verticals within the trade finance we see that will evolve in the region.
Okay. Is it fair to compare the GCC market to the Northern African market from this perspective?
No.
Okay.
I mean, GCC is much more developed on these markets for this, and I think the corporate risk is also much better in this region for us to do that.
Okay. Bruno, you deal with a lot of markets, right? You import from a lot of markets, you supply to many. In terms of the supply chain between GCC and North Africa, which one is more, let's say, agile in your opinion?
Oh, definitely GCC, right? So even if you see the infrastructure that we have in the region is much better, I think, in a few countries, what the governments they are trying to do, because in the end, the governments and regulation needs to support the business as well, right? So I think here in the region is much more advanced than North of Africa, although there are plenty of opportunities in North of Africa to be explored as well, right? But I think, as Fiji rightly said, I think the credit risks are very different, the bureaucracy, the paperwork that you need to have, although I have been seeing a few initiatives by the governments to use digital platforms, like in Egypt, for example, right? So I see evolution and I see traction. And I think definitely the pandemic helped to accelerate a few changes that was already cooking, but now are boiling there,
Thank you. Fatenah, the world is shifting towards an ESG, which is inevitable. Mm-hmm. Is it the same case for supply chain? Would you state that? Would you believe that?
Absolutely. So again, just taking a step back and looking at a survey that was carried out, I think in 2021 by PwC, treasurers listed ESG as one of their top 3 priorities, for the year. And again, I ask myself this question all the time: is why is ESG a focus? Aside from the societal benefits, there are a lot of tangible benefits, I think, for companies and banks to adopt ESG initiatives, because ESG-focused companies have proven to be, more profitable. They have less attrition when it comes to customers, happier employees, and you feel like you're working towards a greater good. So these societal benefits are translating into tangible benefits. Now, when we think of ESG, which is environmental, social, and governance, most people focus on the E. And the E can be a very widespread, from sourcing or funding sustainably sourced commodities to growing greenfield energy projects or renewable energy focused projects. There has been less of a focus, I would say, on the governance and societal aspects, but I think banks are starting to address that. We see that, for example, again, not to toot our own horn, but at Bank of America, we issued a bond back in December of $2 billion focused just on women and minority business enterprises. But there's still, I think, a lot to do in terms of ESG. I think in terms of the future outlook of ESG, number one is, I think, tightening the taxonomy around ESG, and I think this is where we all have to work together, with the corporates and the banks, because when you think of ESG, it literally can be everything from, as I said, renewable energy to workers' rights to diversity and inclusion. It's too widespread of a remit. And I think, secondly, I think banks and corporates have to put not their money, but their intent to where their mouth is. You have to commit certain funds before you see the tangible benefits of these initiatives. We've pledged $1.5 trillion dollars of funding into sustainably linked, initiatives by 2030, which is an insane number when you think about it. But I think it is critical. It's not just a buzzword, because when I started hearing about it, I started thinking to myself, well, why is everybody talking about ESG? But now, having been mired in RFPs that, from a trade finance perspective, from a supply chain finance perspective, that have, a sustainability component to them, I see how important it is to everyone. And from a personal level, it makes me very happy, to be working towards the greater good of something.
Thank you. So I can see there's a few of my friends who are in the fintech world. They used to be bankers. They decide to jump the ship and start their own fintech entities. So let's talk about fintechs. Is it disrupting the banks in terms of supply chain?
From my perspective, I would say it is facilitating.
Okay.
And I would compare it to how the FX trading evolved in the last years.
Okay.
You had to call the bank and do it. Now you can do it. So it is similar, we can put it. It could be a mono-bank program or a multi-bank program, or it could be a network solution that they're providing it. But I think the main focus would be the retention of the client. Yeah. How good are you in onboarding and retaining client by way of service? And in this region, the buzzword is pricing. And as a banker, I think the banks will always have an edge on pricing, because we have deeper access to liquidity at longer terms if needed than the fintechs who look at different forms of funding their So I think it is coexistence, but for us the focus is client service and retention and service deliveries.
Okay. And as an organization, I'll come back to each one of you. This is like a very, very exciting topic for all of us, I'm sure. As an organization, today, I'm sure you get approached on your headquarters level by many fintechs that they have solution or problem statements that they would like to address, or it can be a need driven by one of the clients. How do you perceive that? How do you react to that?
I mean, to be a blunt answer, that's a good thing of working in a multinational bank. You don't get approached by them, but they're approached at our head office level. So we have a products and structuring team. So to be very frank, we don't interact with the service providers on the ground over here. So that's a question for my head office. How do they handle all these calls from fintechs?
Fair enough.
Just one point here. I think what Fiji said is right? I think currently the solutions available in the market, they are more a facilitation tool, right? There's not truly disruption, but I see a lot of opportunities of collaboration. This is what we are seeing, right? I think what the banks, they are good at, distribution and funding. What the platforms are good at, technology and usability of the platforms, right? So when you put together both of them together with the corporates facilitated by regulation, you have a good solution that will add value to the customers, right? I think potentially what could disrupt truly the trade finance, but this is a different story, could be the blockchain.
Okay.
But this is a different story for us to talk maybe next session,
That's another buzzword for, which is, sorry.
Actually, I want to say something. I don't think blockchain will be a disruptor. I think it's going to be a facilitator and an enabler to supply chain finance. If we take a step back again, you're looking at a gap of what, 1.7 trillion? We are not competing with one another as banks and fintechs. I think you were right in highlighting that banks, we have the capital, we have, the knowledge of, the suppliers or the KYC onboarding processes, so to speak. But I see the coupling, and I'm seeing that more and more because you're seeing banks invest in these platforms from a proprietary perspective, as well as partnering up, on RFPs together. When you have a corporate, approaching you to onboard 15,000 suppliers, banks can't do this alone. And fintechs are going to need the banks from a capital perspective. So we're seeing the coupling and the merging of these two. Initially, it could have been disruptive, but I don't see that at all. And I see, in fact, it digitizing, because effectively the coupling of this has led to an acceleration of digitization. But I see this progressing from, the purchase order to the inventory, to the payables, to the receivables. And we have a long way to go before we get to that stage where it's full end-to-end, I think, solution enablement. But no, I think blockchain will facilitate that. And this is where you see the merging of the two. Just my 2 cents.
David.
I think it's totally welcome. It brings a new area that we can collaborate on, as Bruno says, and add more value to clients together. If we look at a couple of jobs back in the Mexican market, which is probably a bit more mature from a supply chain finance perspective, there was a national platform that was bank agnostic, and it was technology provided. It's called Naffin. We also had an in-house solution in our HSBC team. We use both, and both offer different solutions to clients. The growth rate actually on our in-house platform was higher. Why? Because we were able to customize more quickly, agile to certain clients' needs. Other clients like the government platform, we did both. So I think it's about really connecting clients to the best solutions available and adapting your back office infrastructure so you can agile plug and play into things through API and in a seamless way. So we're doing that as a bank with SABB, and we're looking at whatever solution really can bring the best to our clients.
Thank you. Bruno, you've mentioned a couple of things that I have them on my mind, and I want to, explore them further, if I may. You've said you have developed a platform or a portal that you expect your bank to tie up with because you don't want to go to every bank and manage their own supply chain concepts or programs. Okay? Do you expect the banks that you deal with to be on board that, or will you eliminate them if they're not?
So look, I think here is evolution, right? And you need to try to build together. And I think one very important thing that David said is that I forget because where I am as of now, but it's the education internally as well to your procurement team and your stakeholders, right? So, but here, where we are as of now back in Brazil, so we already have a platform. So it's a fintech. So where we are able to plug the banks, right? And there, the vision is very clear. Guys, so you have time. But very soon, if you are not in the platform, you are out, right? Where we are here in the region, we are not there yet, right? Even the banks, they don't have their own platforms yet. right? So, but I see these as the same trend. First, you bring the banks with their all platforms. Then you bring a platform where you put all of the banks, right? And then you start facilitating from there. So I think that's, the vision is very clear, you know? So, and hopefully the banks, they are seeing that coming as well. And the faster they move towards that, better position they will be, specifically in this region. But still, there is a long way to go, especially in this region where adoption was late, slow, etc. You know, but it's coming.
Okay, fair. So until the banks get there, would you consider a SaaS option or a SaaS module where you subscribe to one of the fintech platforms that are out there that offering this service to the market, and you and your respective bank going into that platform to do business together, rather than being at the bank on platform?
Yes, why not? So I think the corporates, they are open for that. Then comes another discussion in terms of regulation, where is the cloud located, etc. But we are definitely open for that, right?
This is an important point. The compliance aspects, that's where banks can bring a lot to the table with the fintechs. What's the local regulation, data hosting, data security, compliance around the products themselves. So there's a real partnership that can happen there with that kind of discussion.
Yeah, I'm being very mindful of the local regulations that are specific to every country and every organization, especially from a central bank perspective. I wanted to understand more from a corporate perspective. Does it really matter to you today if the cloud of the service is using is based in the UAE, or it's based in the UK, or it's based in Brazil as a corporate?
No, as a corporate, it doesn't matter, right? It doesn't matter. So I think that the way that I see here is the following. Are we add value to the corporates and to our suppliers? Yes or no? If yes, let's talk. If no, thank you very much, right? So I think this is the mindset that we need to bring, right? So when the product teams from the banks, they come with a beautiful solution, are we adding value to our corporate and to their suppliers or customers? Yes or no? And I think from there, we can explore different alternatives, and then we go regulation, compliance, cybersecurity, etc. You know, but the first question needs to be answered: are we adding value or not?
Yeah.
Thank you. Now, before we move to the audience for questions and queries, any messages you want to pass regarding supply chain program specifically, David?
No, I think it's a high growth area for a reason, because a lot of corporates are looking at working capital with earnest. How do I improve my KPIs? How do I free up my lowest cost of financing, which is you're freeing up your working capital, right? So these structures can offer that, but do the homework, do the business case, make sure what your 10 objectives are going to happen through implementing a solution.
Thank you. Fatenah?
I think, to David's point, supply chain finance is here to stay. We're unlocking cash out of the balance sheet, or we're helping corporates unlock cash out of the balance sheet. So what's next is probably supply chain finance 2.0. Where do we evolve from here?
Fiji?
Yeah, as I said, I think corporates need to see the value. And when we speak to the few treasurers who have set this up, and they said they never knew that this could add so much value, I think there is a lack of visibility in the region on how much value from cash flow perspective, physical stock supply perspective, balance sheet perspective, this product can give value. Let it be few suppliers or major suppliers, that this product does give value for the working capital management.
Thank you.
From my side, right? So first, for the corporates that are here, do implement supply chain finance. There is value. It's truly a win-win-win solution, right? For the banks, it's much easier to access the smaller customers or suppliers because you have a big, large corporation in between. For the corporates like us, so you are able to improve truly the cash flow, right? For us, we were able to generate $500 million in terms of cash, right? So truly, you can generate cash. Also, you are able to provide internally bigger alignment, because then finance and procurement, they need to work closer. So this way is also good. And for our suppliers, it's truly a way for us to strengthen the supply chain, because many of them, they don't have access, especially in this region where we know the banks, they are not truly have the appetite to go to the middle and smaller corporations, right? So in the sense, they have access to liquidity using large organizations. So do implement corporates. For the banks, I think you guys need to do a much better job in terms of the receivables finance. And this is where we corporates are very keen to explore, but please always keep in mind simplicity and if you are adding value to us.
Thank you. So we've got a couple of minutes before the networking break. Are there any questions to our panelists from the audience or from online, Jeff?
We've got a couple from online, well, a few actually, but probably only time for two, I'd say. First one, how does the use of supply chain finance in the region differ across sectors, particularly in areas such as public sector procurement? And shall I do the second one as well? Or?
Sure.
And the other one is, how large does SABB see the potential of Sharia-compliant SCF in terms of wider use across the 57 Islamic countries? Is this something you're working with the Islamic Development Bank and the multilaterals on?
So, David, would you like to take the second one, given that it's...
Yes, the question was about across the region, or?
I think the question was Sharia-compliant SCF, something not just for the Saudi market, but there's 57 Islamic countries.
I see, yeah.
You're working with the likes of Islamic Development Bank, ITFC, et cetera.
Yeah, no, I think the relevance is definitely there for other markets, and not just for Saudi market, but we may have suppliers, global suppliers, serving buyers in Saudi in some of those countries that need a Sharia solution. So we're definitely looking globally on this. And I think it's one of the fastest growing areas in terms of Islamic trade finance. So certainly there's applicability beyond the Saudi market.
Thank you. Jeff, do you mind repeating the first question for Fiji, please?
I think it was regarding the difference in different sectors, so public sector procurement, regular use of supply chain finance versus private sector business, I suppose. And
yeah, I mean, it's very clear that for us, we've not seen any public sector so far onboarding, but we've seen 100% government-owned entities who are in the operating side of the business looking at it, though they have access to sovereign loans and funds in the aviation side of the business, we've still seen them looking at supply chain financing. But to be very specific, we are seeing it more from the private sector. When I say private sector, private and government-owned related entities that have an operating entity with a cash flow.
Are there any more questions, Jeff, online or from the audience?
I think we'll do one more then, which is a question for the international banks on the panel. As the local entity of your institution, do you have autonomy on local supply chain practice, or decisions come from global headquarters?
I'm happy to take that. So I'm trying to understand the question in terms of autonomy. We are always doing things for the greater good of our clients, and that's a strategy that filters through from the HQ all the way down. Do I single-handedly make a decision to extend any type of facility to a client? Of course not, but it's very important to highlight that when we work as a satellite office or as a branch, we are working with the strategy that is embedded within the entire organization, which is fed through from HQ down.
Thank you very much. Thank you, David, Bruno, Fatenah, Fiji, for your time, dedication, and passion for this topic. I'd like to thank everyone that attended this morning in person or online.